Right, welcome back to another video. In this video, I'm going to talk about why I believe we are about to see a shit hit the fan moment across the board, right? Because I don't believe in having just one chart to tell me what's happening. I believe in having the whole mothership of charts to tell me everything that I need to know. But before I get there, I'm going to just remind you that this is Arias wave, not Elliott wave. In Arias wave, there's a certain set of corrective patterns that occur in a market, right? After every 5-wave move, whether it's down or up, you get a correction, right? And that correction consists of 5 waves: A, B, C, D, E, right? And if you're looking at it the other way, right, going down, then you're going to get basically the reverse: A, B, C, D, E, right? Now, what is this move here in the US dollar, right? It is a bearish move, right? So we can dismiss this particular pattern here, and we can align this one here because this is the one that we're concentrating on, right? So within this corrective set of patterns, we are basically at wave 2 of a 5-wave move, wave E. Okay, now this is the thing I try to explain to people, is that these patterns do occur, and if you can catch on to them early, it's amazing. But when the pattern is so long term and it's so slow to take shape, then all you can do is use the evidence that you have and make your decisions accordingly. But when everything starts to line up the way I'm going to show you, this stuff gets crazy. So just because Arias wave is not a mainstream tool, well, I teach it. I teach it on this channel, and I'm going to start teaching it more for free as I move forward, right? I do believe in the law of circulation. If you know what that is, you give, you get. So anyway, I believe that this here, since 2008, was a 1A, B, C, D, E pattern. Here we're in the crux of it. We're in the basing of a massive move to the upside here, right? The E wave complete as far as we can tell, right? This may not be 100% accurate until we get a break of this move up here, this area, this high, right? To break the start of wave E is to assume that there's not going to be more downside, more wave E, right? Now that can happen. Why? Because we're dealing with fractal patterns here, right? So we can have this become a zigzag, right? This could be a wave A zigzag. If this is a 5-wave move, right? This could be A, we can get B, we can get C, and you can see where I'm going with this, right? This is all just fractal shit, right? It just happens constantly, right? Anyway, the point I'm trying to make here is I believe at this point that this is going to keep going higher. This is going to break the top. It's going to break the roof of this, right? And the reason I believe that's going to happen, well, it's going to involve you looking at other charts with me, right? So this here is, for me, a good indication that yes, US dollar will continue to move higher, right? Now, before we jump the ship too quick, there's something interesting that happens with E waves, right? Very interesting indeed, compared to a normal 5-wave move that you'd see on a, like basically a 5-wave move. Like, it doesn't always happen this way. You get a 1, 2, 3, 4, 5, right? You can see 5-wave moves that have a fairly sharp wave 2, and then you get wave 4 that kind of becomes a bit longer in time as it plays out. But with wave E's, I tend to find that the alternation, right? And if you don't know what alternation is, like let's just say, for example, you get a wave 1, 2, 1, 2, 3, right? And then you get a bit longer of a correction, right? For 4, and you get 5, and then you get a bit longer of a correction for the next wave 4, and then 5, right? It's like symmetry. Normally it doesn't happen like that. Normally you get a bit of symmetry, like 1, 2, 1. You get a bit more sideways in wave 2 of wave 3, right? You get the sharp 4. You get the rest of the wave 5 for the 3, and then you get a bit of symmetry there, right? You get a bit of symmetry in the pattern, and then you get the 5, right? So you can see that there was alternation between 2 and 4 of 3, and then 2 of 4 of the whole wave, right? Now with E waves, what I tend to see is that you basically get the alternation occurring mostly on the downside, right? So you get the long-winded correction, right, on the downside, and you go up for wave 1, and you get the long-winded correction, on the wave 2 or wave 3, that type of thing, and then you get sharpness at the top, right? So the whole thing is skewed. Like there's no alternation. Basically, it doesn't care about alternation. It just pops up really hard, and then what tends to happen is that the next wave then kicks in hard, right? So this is why I believe that typically wave E's can look like this, because like I seen on an XLM chart, right? I'll just quickly duck around to that now, right? I just made a video on that. You can see here for the wave E, it did a bit of chop down the bottom and then went super sharp. So this thing I expect to go super sharp and then super reversal to the downside, right? So definitely had a bit of chop down the bottom. That's a wave E. It's typical wave E that you see happening right there, right? Anyway, so we need to see a break of that last high to confirm that. Now, at the moment, it's looking pretty good for that. Okay, so that's one thing, the US dollar. Let's go to gold, right? What is the long-term pattern of gold? Does anybody know? Well, I've been tracking this for quite a while, right? And the long-term pattern of gold is that this is a BC D wave. This is a D wave, right? Now, you might wonder, well, how do I know this is a B wave? Well, there's a historical chart of gold that basically spells this out to some degree, right? You got to find that chart. I can post it here eventually. If this gets some interest, let me know if you want to see it. The point is that yes, this is a D wave, right? And it's not the only chart that's doing this, right? It's also happening in the stock market, right? So I have posted videos about this numerous times. In terms of a pullback, previous fourth wave of a third wave is what I believe will happen. So that could be the low end of the fourth or the high end of the fourth. I believe we're going to see a pullback that's going to go back to about $800 roughly, right? Now, this was the A wave of the zigzag. This was the C wave of the zigzag, right? What you got to do is draw the line across the top of A wave and wave 3. You could see why it reversed when it hit that line. Okay, that's pretty straightforward. I predicted this move up, just didn't post about it, but I knew what was happening the whole time. I posted about it in the past, and it happened the way I thought it would. And now I think we hit that top. Great. So we can see that there's a D and now an incoming E wave that's going to happen, right? Now, this is not the only chart this is happening on, right? If you want to look at, I don't know if this is going to be the chart. Yeah, this is the chart that I've been working on a lot lately in great detail to really try to explain to you what I believe is going to happen here moving forward, right? So what I believe is happening in the S&P 500, Dow Jones, whatever, this even applies to the NASDAQ, is that we've seen a move here that is basically a long-term D wave pattern, right? So the Great Depression, my latest analysis suggests that this move was an ABC. The Great Depression was an ABC move, right? And this is very interesting because the 2000 crash in the NASDAQ and the S&P was the ABC move, right? This is something that I've never realized until now. And it's very interesting how these patterns occur, right? And the internals justify it. If you want me to pull apart the Great Depression waves for you, let me know in the comments. I'll do it. If I do that, I'll do it for the 2000 bust as well. Very interesting. So what tends to happen after such a sharp ABC pattern to the downside is you get a massive wave D to the upside, right? Now, corrections, D waves typically shouldn't be that massive, but this one is gigantic. I believe that this here is a wave of a D wave. We saw an A, B, C for 87 crash, and the D wave up until now. This is complete bubble territory, right? Now, if this doesn't ring a bell to you somewhat, there's a D wave is the same wave that we are in since roughly 87, a bit earlier on gold, but D wave is the theme of the day for gold, right? And it also is the same for the S&P and the NASDAQ. The NASDAQ is one giant D wave, right? Now, an E wave doesn't have to be massive in its crash. The GFC was an E wave according to this analysis. All right, the GFC was an E wave, right? I do now believe that this was impulsive all the way till now. I did say it wasn't at one point, but I was digging holes, right? I made a mistake and I've been working really hard to correct those mistakes, and that's why I'm posting these videos right now. Now, the thing is, we don't typically need to see such a massive correction for these type of things, but there is one problem. What happens when interest rates go back to 81 levels? Well, where was 1981 according to this chart, right? 1981 was about here. Roughly the area of support that I'm saying that this could possibly go back down towards. Does that seem so far out? Does that seem so crazy? Well, there's another thing. This long-term support pattern, which is part of a long-term chart, which I've posted before, but I'll post it again if you're interested. Please put the comments down below. This is a very important trend line that is actually going back hundreds of years when you join the European and the US chart together, right? This is a breakout. This is a complete breakout in a D wave, which D waves tend to be breakout waves, by the way, right? In case you didn't know that, it's an RES wave phenomenon. D wave is the breakout wave. Now, this whole pattern since the Great Depression is a massive D wave with an inside B wave, D wave inside the B wave, B wave in brackets. The D wave within the D wave is also mega expanded and has been the reason why we've seen such crazy asset prices since the 80s, right? And I do believe that it's to do with interest rates, right? Now, this is crazy because I can go into so much detail on what I believe interest rates will do moving forward. But let me just take you to the TNX chart to really highlight and bring home this analysis. Right. Now, what is this chart? Now, if you want to see that chart, I'll make a video with the long-term pattern as well. Put the comments down below if you want to see it. I can bring it all together with all those long-term charts as well. So this is a wave 5 that happened since 81 because it was a wave E, right, that had a really massive wave 4 pullback, right? And this is the wave 5, which took so long, weak wave 5. Now, for the zigzag to the upside to be completed, we need to see a move above 20%. Now, I don't believe that 20% is going to happen straight away, but it will give us clues down the track as to what's going to happen with these markets, right? Now, a measured move would take us just below 16%, but I believe D waves are breakout waves. It'll pierce through that high, and then we're going to see the market start to produce another wave E that looks like the wave E since 81. It's going to start to produce another weak version of that pattern again for another maybe 10 to 20 years, right? What's going to stop it from happening? You tell me, right? It's going to be the same shit. It's going to come back to retest the breakout, whatever you call it, who cares? The point is that pullback is going to then spur a new bull market in the stock market after this next crash. So it's going to give us an opportunity to once again invest for the future without these uncertain times. But at the moment, all I can say is that we have uncertain times. So I suppose what I'm trying to say here once again is this D wave again. D wave is the wave here that is causing the craziness. D waves are insane, right? You may look at this chart and say, well, hang on a minute. That looks like a 5-wave move. It's not, okay? The problem with Elliott wave is that they never took into consideration the crazy expansive waves that are corrective waves, right? So what I do specifically is I focused on the corrections, and that gives me all the clues. A, B, C, D, E, right? That's basically how the cookie crumbles here. 16% interest rates are incoming. We just need to break that high because it's actually like A, B, C, D, E. This is a CDE pattern. Now we need to break the start of wave E to see the prices move higher. But if you look at the Aussie, and I've posted a video on this, have a look if you dare. 10-year. We're going to get anywhere with this. Hang on. Right. In the Australian market, we've already broken that high. Right? It's the same pattern. It's the same shit. I made a video on this. Check it out. I'll link it down below. Right? I've already made a video on this. The Australian 10-year yield has already broken the start of wave E. In that B wave, we're going to 16%. It's the same shit. Right? This is what's going to happen. This is what's going to cause a massive crash in the market. It's going to affect cryptos as well. If you think it's not going to affect cryptos because cryptos are special and you're a special snowflake, just be careful of that kind of thinking because you might be subscribing to sheep mentality and herding along with the rest of these people who make all these lovely videos with beautiful thumbnails, expecting massive gains and get rich quick schemes. Basically, Ponzi schemes. That's what it is. The whole market is a Ponzi. You need to be careful because lemmings follow each other off cliffs. So if you want to be that, do that. That's fine. If you want to actually learn how these waves operate, stick around because I'm going to start to teach it without you having to pay a dime. I'm going to start to lay it out even more detail. I'm going to bring whiteboard videos soon. You're going to love it. Take it easy.